Welcome in. Let's get into some stuff today. So today's going to be, we are going to go through and really talk about how we find stocks. How do you screen for stocks? It's a big question that everybody has. It's a question that I frequently get. And frankly, I don't talk about it enough. So we're going to do that today. But before we do that, come over to my trading view chart right here. I want to look at the S&P 500. So looking at the S&P, I got some questions yesterday. Of course, the Fed came out, announced that they were going to cut interest rates by 25 basis points, which the market reaction to me was very surprising. So if you look at this thing called the Fed Watch tool from the CME group, whatever, doesn't matter. But basically, it's what the market uses to kind of predict what's going to happen with interest rates. And they do it for all different kinds of stuff, but this is specifically what the Fed is going to do. They said that they were predicting that there was a 98.5% chance on Tuesday that the market was going to, or that the Fed was going to cut interest rates by 25 basis points. They did it, right? So everybody predicted. And what happened to the stock market, or what happened to the S&P? It ended up down about 3%. So the market got what it thought it was going to get, and it was down 3%. So the question becomes, what's going to happen in the future? Well, let's take a look here, and because we were damn near all-time highs. So the all-time highs were right here. This happened, 2 weeks ago. Now, let's draw some lines in here before we get into screening some stocks. You can see here, because this is important, where's the market going to go? It's a question that everybody has. We can use technicals to kind of understand or have a general idea of where things are going to go. Are we predicting the future? No, but it gives us a pretty good probability of where things are going to go. So right now, I see a couple of things. One, we have this very strong support level, right? But what's just below this support level? If it falls below this support level, what do we have? Well, we have a gap right here. A gap that needs to fill. What happens when you hit a gap? You usually accelerate to the next support level. So there's a very good chance in the next, well, I guess maybe the rest of the year, especially with volume slowing down next week. This is probably your last 2 days, maybe last day of decent volume in this market. Why? You're going into Christmas. So tomorrow is going to probably be people that are taking the whole next week off. They're probably taking half day tomorrow. They're taking the whole day off tomorrow, right? Then you get through Christmas. So Christmas Day, the market's closed. That's Wednesday. The day after Christmas, I believe it's maybe half a day. Nobody's going to be there on Friday. Then you roll into the following week. New Year's is coming up. Nobody's trading. New Year's Day comes. Market's not open. Is New Year's Day? What day is New Year's Day? I want to make sure I'm saying this correctly. Hold on. New Year's Day. Okay, so it's a weekday. Market's not open. And I think New Year's Eve, the market closes at half day. So you're not going to have volume for the next week. Is that good or bad? It depends. We talked about this on Tuesday in our private live stream. Let me explain volume to you real quick, just so we can understand what's going to happen at this gap. This is very important to understand. So let's say that you have 1,000 shares traded in the S&P 500. I know this is not correct. It's like 3.5 billion shares traded per day. I'm going to use 1,000 just to use a number so I don't have to draw a billion zeros. Okay? Let's say that the average volume during the week, not overall, just during the week is you're getting 700 trades in, right? You're getting 700 trades in. And of those 700, 600 of them are buyers, right? So on a normal day, when you have average volume, you probably have maybe 550 that are buying, 450 that are selling, something like that. You get a pretty good push-pull. Market doesn't do anything. You kind of get these doji candles, right? Now, when volume is low, and maybe you just have all buyers in there, you have 600 buyers and 100 sellers. What's going to happen to the stock price? It's going to shoot up, right? It's going to shoot up. Conversely, if you have 600 sellers and 100 buyers, it's going to shoot down. So I think a lot depends on what the sentiment is going into next week or going into tomorrow, really. That's what's going to happen at this gap. If you have a lot of people that are just selling, end of the year, what do people do? Tax loss harvests. End of the year, they want to reduce their tax liability, so they sell some losses going in, and that could bring stocks down. Doesn't mean that it's permanent, but it could bring stocks down. You get that acceleration, and at that point, maybe you go lower. I don't know. But the stochastic is telling us that we're going to stay up here. That's the big thing. So that's kind of what I'm seeing with the market right now. NASDAQ looks similar. Let's go to the Qs real quick. NASDAQ looks very similar. You could see yesterday it was down 3.6%. Yep, 3.6%. It looks exactly the same. And if I draw in those lines again, you could see it. Support level. Here's the next support level that we drew. It doesn't really have the same gap. You could see the gap already filled here. This was the gap right here. So the gap already filled, but let's get into screening some stocks. So how do I find stocks outside of the community? How do I find stocks? And what I'm going to do here, I'm going to pull up a watch list that I created. It's called the audience watch list, audience list. You guys send me stocks that you guys are seeing. We'll throw them on here. We'll get some audience participation going. When, let's say that you send me Apple, I want you paying attention to Apple later in the show. Be like, hey, check out Apple. You never know what's going to happen. So how do we find these stocks to put on this list? Well, my number one way of doing this is very simple. Yahoo Finance. So this is going to take some time. We'll do this, but it's going to take some time. And by time, I mean a couple of days. Go to markets. Markets give you everything that's going on. You have the crypto markets. You have currencies. You have commodities in here. You have options. You have tech, utilities. I like to go to the most actives. What does the most actives mean? Well, it all goes back to exactly what we were talking about. Most active means stocks that are getting the most volume participation, the most shares traded per day. Why is that important? We want stocks that have the most shares traded per day because it gives us momentum to the top or bottom depending on where we're going. Now, I like to write down these stocks that are in here. So here's your top 25 right now, and you can see the volume. Average volume on, what is this? Rigetti, no clue. It's not going to be one of our top 5. 51.8 million, you already have, it's been 36 minutes, you have 57 million shares traded. Obviously, something happened. So if we go through here, NVIDIA, Micron, Tesla, Palantir, Lucid, Hims, Hers, Intel, Ford. I'm just picking out the ones that I know I'm going to consistently see here. I'll do the same thing tomorrow. Super Micro Computers, Mara is always in there. Apple, AMD, Broadcom, Amazon, like Atayu, Unibanco. That's not going to be in there. That's a one-day boom that's happening right now. So I'm going to write these 25 down, and I am going to come tomorrow, and I'm going to do the same thing. I'm going to write down the 25. And I'm going to come on Monday, and I'm going to write down the 25. And I'm going to come on Tuesday and write down the 25. And Wednesday, if it wasn't Christmas, and I would write down the 25. And I take 5 days of sample size. And why am I doing that? Because I want to make sure that these stocks consistently have a lot of average volume. I don't want to come in here and say, okay, I have Rigetti, Computing, and Itaú, Unibanco, and those are going to be my stocks that I'm going to trade into the future. Well, this might have a lot of shares being traded today, but tomorrow and next week and 2 weeks from now, probably not going to have that many shares traded. Something happened. News happened. Earnings happened. Doesn't matter what it is, but everybody's flocking to it right now. I need to make sure that it's on a consistent basis. So I'll write these down, and we'll start putting some things in there. Now, something else you can do, and I like doing this from the day trading side. Day trading, what is day trading all about? Well, let's pull up the chart here and just look at it real quick. So day trading is all about executing a trade within a day from 9:30 a.m. Eastern time to 4 p.m. Eastern time. You are in and out of a trade in that same day. It's fast. It can happen quickly. The idea, and a lot of these, so I'm going to show you something. A lot of these are going to be like that Rigetti Computing. You day trade it today because it's getting a ton of volume. It's moving up or it's moving down. But tomorrow it might not be. But you could take advantage of it today. So how do you do that? Well, come over here and we look at the top gainers. What does that mean? There's Sable. What does that mean? That means that you are looking at stocks that have the biggest gain of the day. And conversely, if you go to top losers, it's going to be stocks with the biggest loss of the day, right? So top gainers. I would come here today and say, okay, Sable, SOC, Darden Restaurants, Accenture. I would go right to a day trading chart. So let's go over here. Let's type in SOC. Oops, that's SOX. SOC. Not really getting anything today. Darden, DRI. Let's see. This is just, and guys, 80% of the time, you're not going to find anything just by looking at these. Why? Because usually when you get big moves like this, it happens pre-market. So I know that Sable, because I was paying attention to this one this morning. Damn it. SOC. Look at that. See, it jumped up. You have that gap there. So it jumped up here. It's up 17%. The majority of it was overnight. We can actually see it even better over here if we look. So this is where we close the day right here. Close the day all the way down here. And you open the day up here. So you got them move overnight. So when you see these up 17%, 17% probably happened in overnight trading. You're not actually going to be able to trade the move. So that's why you just keep going through KBR, OKLO, just go down the list. So that's how you can handle the day trading side of things. But when it comes to our swing trades or long-term trades, I'm mostly paying attention here to the most actives. And actually, it's really cool how they put that right there. That used to not be there. So that's cool. All right, let's get into some stuff. Send me some of your stocks that you are looking at, and let me know if that was a helpful explanation on how to screen stocks. I can go into, we're actually going to make a video on the different types of screeners. FinViz, great screener. TradingView, pretty decent screener. There's so many different, MarketWatch has a good screener. If you really wanted to go crazy and spend 30 grand per year, you could have great screeners done on Bloomberg. Not necessary, but everywhere typically has a good screener. All you're doing is screening for different indicators. It's really not that difficult. You don't need anything super incredible. So let's see. What average volume do you want to consider worthy of trading? I like to see an average volume of about 1 million shares traded per day. That's a great question. So especially if it's a stock that is, call it $5 a share. Here's what you don't want to happen. You get in a stock that's, say $1 per share. This is the problem with penny stocks. $1 per share. Average volume is 200,000 shares traded per day. Well, it would be very simple for a lot of people to go in and buy $200,000 of this stock, which is the average volume for the day, if they can get all the shares, and it's just going to skyrocket the price. And conversely, if they sell their shares, the price is going to absolutely plummet. That's in an ideal situation where they can get all the shares, they can liquidate all the shares, et cetera. But that's what you don't want to happen. So if you have a stock that's, call it $20 a share, and there are, or let's say $220 a share, I'm using Apple in this example, and there are 75 million shares traded per day, who can possibly go in, besides Warren Buffett, and execute the trade? And I'm talking about an ideal situation. If Warren were to sell 50 million shares or whatever he has, he's going to bleed it out. It's going to take time. No one's even going to notice. But that's the point of having a lot of shares. So I like to see 1 million shares traded per day. And I like the price to be a little bit higher, maybe $10. $10 is probably my minimum. Otherwise, you get into some scary territory, okay? Okay. I think he said it's based on, yes, you correct. What I'm wondering is what time zones do you trade on? 15 minutes, hour, day. Okay. It's not time zones, it's time periods. So if I'm looking at my 2 charts here, these are my main 2 charts. This is each one of these candles, and let's zoom this out. Each one of these candles here and each one of these candles here, this is my daily chart, this is my weekly chart, is a 1-day candle. These are exactly the same. Okay? These are exactly the same candle-wise. Now, it comes down to what's down here, weekly. This is my weekly stochastic. It's based on a week's trend. This is my daily stochastic, based on a day's trend. That's a great question. And then, if you come over here to day trading, this is a 15-minute chart. Each one of these candles is 15 minutes. So basically, if we're looking at SOC today, you see we're 45 minutes almost into the stock market. You have 1, 2, 3 candles, 9:30, 9:45, 10 o'clock, right? Come over here, SOC. You see this candle right here today? We're going to take a magnifying glass and zoom in on this. That's what you have here. That's these 3 candles. So it basically takes a magnifying glass, zooms in, and you can see exactly what's inside of this daily candle. That's the beauty of the 15-minute chart. And each 15-minute period, you're going to get a new candle. So right now, it's 10:14 in 15 seconds, 9:30, 9:45, 10 o'clock. You're going to get a new candle in about 40 seconds. So there's 3 candles here. We're going to go back for the 4th one, and I'll show you guys from there. I'm looking at AZEK. All right, so guys, when you send over your questions, let's leave it here for a second so you can watch for the 4th candle to pop up. Please send over and say whether you're looking at it from a long-term perspective. So you're looking at a trade that you want to make based on the weekly stochastic that's going to be from, call it 2 weeks to 2 months, right? Or here we have 4, 3, 2, 1. We're going to get a new candle. Good speed trading view. 5-second delay. That's not good. So there's your new candle. You can see that we have a new candle developing here. So now this is the next 15-minute candle. So this is really zooming in on this candle right here. Then you can come over and say, I want you to ask me, I need a swing trade. Swing trades are, of course, 1 to 5 days. Or if you wanted to day trade it, zoom in on that with the magnifying glass and come over here. Okay, next. AZEK, okay. AZEK. So first we want to take a peek at the volume. You have 1.39 million shares traded if you just look right here, right? 1.39 million, that's the average volume. That's a yellow line that's coasting on the top there. Today so far you have, what do you have? I can't read that number. See if I can blow this up. Can we go like this? Can we Option R this? Okay, that's helpful. So what are we looking at here? AZEK. Let's go on both charts and just see. So, okay, this is a great example. This seems to be lining, well, the trade seems to be over, but let's use the example that we can pull out of this. I say that the trade is kind of over because your stochastic is here already on the bottom. You've already gone through the sweet spot. Remember, we're trading probabilities here. We want the highest probability to make money. That highest probability to make money is here in the sweet spot. It's going to give you the most amount of run. Think about when you're going down a runway with a plane. Do you want more runway or less runway? Obviously, you want more runway so you can get a higher speed when you're taking off and you can have a longer duration of time to slow down the plane. It's the same thing when it comes to a stock. So once you get down here, you're kind of at the end of the runway. There's a good chance that you're going to run into the woods, right? You don't want that. You want to be executing the trade up here. So, but over here, look, this is still a positive trend. So there's no need to go short here. Did you get a big candle down yesterday? Yes, but this is why price action is not everything, right? Who asked me that? D-Man, did that make sense? Did that explanation make sense for you? GRBK, short long. Thank you very much. GRBK, okay, let's see. So again, I like what we saw. I wish you would have asked me this 2 weeks ago. Why? That's really a question. Why? Because you were in the sweet spot and you were moving down so nice. And there's actually so many engulfing candles in here. I have not heard of this ticker symbol before. Man, really great selling volume. This is a good looking trade. Good find. But in my opinion, it's too late. Okay, let's go over why it's too late. Well, it's not too late just because the price is down. That's not it. It's not too late because it's gone from 70 to 57. That's not why at all. This thing could go to 30. It can go to 20. It doesn't matter. You just depend on the chart. It is because of this. If I draw a line here, I draw lines here, you just have a lot of support that you're running into, right? So we're going back here to 2023. You're just stuck. You're going to be stuck here at this strong level of support. And even if you get through that level of support, what's going to be next? This level of support. So you're going to have 2 different levels of support that you're just going to absolutely be stuck on. And that's not ideal. So I do think that this, what I just drew, coupled with this, is kind of the end of the line when it comes to this trade. And I think it's a very important lesson to understand. That makes sense, Jonathan? Okay, you just noticed. Good. Google swing short. You mentioned volume at the top of the show. Does it still look good for weekly volume? Let's see. Google. Swing. So he wanted a swing short. Okay. So now, before I look at anything else, I'm just gonna. I don't know what the volume's doing. I don't know what the candles are doing. My eyes always go to trend. That's the first thing that I look at. This is what I'm talking about. The first thing is a check. We're good. It's in the sweet spot. It's high in the sweet spot. You have a lot of runway to work with. We're only at 66%. We just crossed over 80. We're starting to get this downward movement. We have all this way to go. Now, what's the way to go? Well, we're going to probably come down to 178.32. That's a 25-day moving average. Do you execute the trade today? No, you don't. Why? It's because you need that sell short signal. In this case, we're going to be selling short because we want to go down. You can call it a buy signal, sell short signal. What is that signal? Well, it's two things, really. It's volume, which you really don't have bad volume right now. You like to see 30% of average by 10:30. We might get there. We might get 10 million shares traded by 10:30 in the next 10 minutes. We might get another 4 million. But if we get that, let's assume we get 10 million shares traded in the next 10 minutes. What do we want to see? We want to see an engulfing candlestick like this that takes out the low of the day. Why do you want to take out the low of the day? The idea of taking out the low of the day is that you want to have momentum and probability on your side. What does the low of the previous day mean? It's resistance. Just like on that last stock that we were looking at. I don't remember what it was. GRBK. Just like this, GRBK. We had all this in here, right? Now this is years of resistance, correct? But if we go back to Google, it's the same idea. Of course, it's much weaker, but it's the same idea, actually. It's really, let's see. Yeah, it's kind of dates back to June or July. But you got to get through that. If you get through that with good volume, meaning that you're going to have something accelerating you through the resistance point or the support level, coupled with the stochastic, you have something. So I'm actually going to put Google. This is the first one that I like. I'm going to put Google on the watch list. And I'm going to put a note in here. I'm going to put a note on everything. So let's write in here, swing trade short with the next engulfing candle plus good volume. That's the idea. Stochastic currently at, I spelled currently wrong, 66. So we'll just put that in there. And this is, I know it'll timestamp, but 12:19 at 10:22 a.m. So we'll put that in there just so we can see it and we can go back to it. But I like what we're seeing here if we get that development. Now, question also becomes, could you have shorted it yesterday? I think you could have. I think you could have shorted it yesterday. Was it a little bit early based on the stochastic? Maybe. But you had such good volume yesterday with such a nice engulfing candlestick. I think you could have executed that trade yesterday. But I don't think it's over. All right, Starbucks. Starbucks is one that I'm 100% putting on here because I like it a lot. So let's figure out what we can do with Starbucks. Starbucks has a lot of potential right now. So let's go S-Bucks. It just keeps moving down. Now, it keeps moving down, but we're not getting that primo setup yet. In an ideal world, I would like this trend to be down in here. It's not going to happen right now. That's okay. So let's go over here and see if we have anything. It's hovering down to the 200. Okay, nothing crazy there. Let's go here. So I'm going to put a tracker share on Starbucks now. And give me 1 second here. If I don't already have one, I might already have one, but I don't think I do. Oh, no, I do. Perfect. Okay. I kind of want to just put a small position on this. Why? So let me explain a couple of things here. If we look at a couple of things, number one, you can see if we just look back, it's just a lot of support that it's holding at, correct? But it has broken it before. That's why we ended up down here. Now, the support is worrying me because it's coupled with the trend up here. I would like the trend to just break down a little bit. Break down this trend and we'll have something with Starbucks. But the volume seems to be pretty good. Let's blow up this chart and let's look at the volume. The volume seems to be pretty good. It's not decelerating. Yesterday we had more volume than the previous day. Today we have 1.75 million out of 7.2. Not ideal, but it's getting there. You can see that wick up there that it's pulling back down. I'm going to change it. I don't want this anymore. Short off resistance. I don't really have any notes on this. Honestly, I think it's just wait until you get a good engulfing candle and just let volume sustain. That's my opinion on Starbucks. Pretty good one, Hans. Okay. Coca-Cola long-term. Coca-Cola. Are you guys using any screeners right now to be finding these stocks? That's the question. You can also come down here and screen based on stochastic. If we pull this up, you can screen based on, you can screen on a lot of different stuff. You can screen based off of oscillators. You can screen based off of dividends if you wanted to. I don't know why you'd want to do that for trading, but you can do that. You can come in here and add different things on your screen. You can screen based off of moving averages. You can screen off of 52-week lows. You could screen off of stochastics. Where's stochastics at? Filters. I think stochastic is in here. You can. That's a great way to find things that are in the sweet spot. So you can do that with TradingView. It's pretty good. The one thing I don't like about it is you can't trade the stochastic numbers. But all right, let's look at Coca-Cola. So for me, I don't love Coca-Cola right now. Now, who asked me that question? Lost Islander. What do you see with Coca-Cola? I see one thing, and this could be the question that you're asking me, but I'm not going to say it. I want you to say it first. What are you seeing with Coca-Cola right now? All right. Okay. I noticed that SOXL hits 27 range, bounces back up. Just an observation. SOXL. This is the levered ETF of something, right? Okay. So he sees it. He sees that it hits. And guys, this is what we were talking about. This is what we talk about. We talk about these resistance and support levels, right? So you can see kind of back in here. You see that base right there? It pulled it and it ran way up and it pulled way back and it hit the bottom and it hit the bottom and it hit the bottom here after running way up, coming back down. Consolidated in here. Kind of had a peak in there. You kind of had a bottom right there. Same thing. Bottom, bottom, bottom. So he sees something. It always pulls back and hits that 27 number, 2650, whatever it is. It's an interesting way of looking at it, right? I think this is a pretty good one to look at. Now, with this being said, this is a 3-time levered ETF. That means it moves 3 times as fast as the market. So if we use the S&P 500 as the benchmark, the beta on it, meaning the volatility relative to the market, is 1. Okay? This is, well, actually, let's just look this up. Let's look up SOXL. Should be 3 times or higher. Beta 4.66. So theoretically, if the market moves 1, this is going to move 4.66 times as fast. That's fast. Be very careful with these. I never recommend that people stay in 3-time levered ETFs overnight. I exclusively say you should day trade these only. That's my personal opinion. All right. Patience on Starbucks, like Rich said, patience on Starbucks is going to be the best thing for this. Okay. Mo, sorry, couldn't ask the other day. We'll paste it here. I actually answered your question the other day, but you could send it again. Turning point, SMAs, W trend, too soon. Okay, so he's talking about Coca-Cola. So let's go back to Coke. I see one thing with Coke. Nothing's happening down here. It's stuck. It's stuck at the moving average, right? So if we just look at this, let's just blow this up. It's stuck. Here, 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 here. It's very obvious, right? Now, when it comes to the trend, I could see one thing, putting a tracker share on this. Why? What's a tracker share? Tracker share is one share that you buy to make sure that you pay attention to it every single day. That's the idea behind a tracker versus putting it on a watch list like this, not like our new one, like this, and it just gets lost in the shuffle. That's the idea behind it. So maybe you could buy a share for $63 and listen, best case scenario, you go sideways and you start to creep up and eventually you get in the sweet spot and you make some money and maybe you run up here, maybe you run halfway, who knows. Worst case scenario, Coca-Cola goes out of business and they're never to exist again and you lose $63. That's literally the worst case scenario. So that's why I like tracker shares. For those of you that don't know, that's a very low likelihood. But okay. All right. So that 27 would be support. Just typing it. Yeah, it is. All right. Zim long eventually. Yeah. So I actually like Zim long eventually. And let's see. The eventually is just the question because right now you cannot go long based on this and you cannot go long based on this. But I like that we can go, we're in a consolidation channel. We can go, let's see. If we draw some lines, here's the top of our consolidation channel and here's the bottom. And what's happening? Well, we're just bouncing back and forth between basically $16 and $24. That's all we're doing. See that? Up, down, up, down, up, down, up, down, up, down, up, down. That's it. That's all you're doing. Did you go below it? Yeah. Did you go above it slightly? Yeah. But for the most part, you're going to land in that same area. So this is, I don't want to say this is the end of the trade, but I have a feeling that it is. Let's look at the volume. Yeah, the volume's not very good. I don't think, what's going to propel this down to $16? Well, it's going to be volume, selling volume. We're just not getting that right now. So maybe the trade is over. I've recently taken profits on it. Sorry, I had to drop. Okay. I see a quick reversal trend. Oh, IREN. That's right. And it was the 12th. Yeah, I remember this. IREN, the 12th. Where was that? There was something that you missed. I said it the other day. Was this it? Yep. So if you look at this, IREN from the 12th, get rid of this. If you look at this, basically, you shorted it right here, right? And I came over here and looked at this, and this was, you did it on the 12th. Where was it? 12th. So if you zoom out, look, you were kind of right there at this big level of support, right? So that's why that didn't work out for you. And if we zoom even closer, IREN, this is the 12th right here, you can see, just ignore this, but look back here, you kind of had, see, this was you had a couple of peaks right here, you had a peak right there, so you were kind of at that level of support that you couldn't get through, and that's why it bounced back off of it. Now, with that being said, look at the ugly face that occurred, right? You have an ugly face pattern here. Oh my God, come on. You have an ugly face pattern here, developed, came right down. So I would have looked at this more for a swing trade than a day trade. All right. All right, any other questions that you guys have right now or screening questions that you guys have? I am going to take those 25 stocks, screen them down, And what I'm going to try to do is strip out the Magnificent Seven, because I know the Magnificent Seven is getting good volume. We saw it. Of course, you're going to find in there, if we just go here, you're going to find in the most actives, NVIDIA, Tesla, Apple, Amazon. I'm surprised Google's not in here. So those are, you're going to find those. I'm going to try to strip those ones out because I don't like going long and short on those. But that's what we're looking for. Okay, we're looking at the 12th. Same candle here. BBAI. Let's see. It's almost exactly the same thing, man. It's almost exactly the same thing. You hit a resistance point here, and you were in an ugly face. I would look and say I would pay more attention to the ugly face and going short on this long term than the other way. FMC looks like Zim trading in a channel. FMC. There's a lot of channels happening right now. Yes, you are correct. Here's the top of your channel. Here's the bottom. You're just range bound. Great stock for swing trading. Okay. Any other questions, guys? Great questions today. Here's some other things you can use. FinViz is a great stock screener. You don't have to pay for it either. And you can run screener, and you can go and kind of do anything. You can run it on fundamentals. You can run it on technicals here if you wanted to. If you wanted to find things that were kind of 50% below the 200-day moving average. If you wanted to find gaps that happen, say gaps up over 7%. If you wanted to find candlesticks that are hammer formations, inverted hammer formations, doji candles, what have you. And you can customize your other things too if you want to go and start paying for them. But you can customize based on beta. For you day traders out there, let's get rid of this stuff. If you want to customize things and say, let's look at, I want to find things with a beta over 3. Well, there you go. There's your betas over 3, right? And then be selective from here. Don't just jump in on the first one. Go find things and be a little bit selective of it. Is there anything that is... Oh, yeah, you can do performance. Performance today, 5% or higher. There you go. This is a really cool tool. It's a really cool tool. And if you wanted to, you can come in and do fundamentals, PEs, etc. FinViz is a great tool, and it's free until you want to upgrade. Okay, LYV long, good question. We're paying attention to this one for a while. LYV long. I think I'd rather pay attention to this one short, if I'm being honest with you. I think you kind of missed the long, but let's put this here. LYV. I don't know what I'm going to do with this one yet. I don't know if I want to go long or short. I don't know why I just did that. I don't know if I want to go long or short, LYV. But I'm more inclined to go short. Why? I'm just going to let this keep going, and it might keep going, but eventually it's going to roll down, and we're going to be able to make some pretty good gains on this thing. And Hans, you've been following this one for quite some time, so I like it. I like it. All right. Well, guys, we do these live streams, and I go into this was I tried to stay more surface level with this one today. If you want to get deeper, and like Hans asked about LYV, we could really go and do a deeper analysis on Live Nation. We do those live streams on Tuesday. They are private. They are only for people that are in the Patreon community. So link is in the description below if you're interested, if you're ready for it. If not, we'll see you back here for our next public live stream. Remember, guys, please remember this. Volume is going to be wonky over the next couple of weeks. Don't get caught up in it. You guys have a great day. See ya.